All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I had a couple questions come in regarding some economics, and so I wanted to go out and jump on and take a look at it. Let's start with the data that we saw last night here. Chinese manufacturing data, the PMI, and came in at 50.1. Which is lower than the prior, lower than the consensus, and takes away some of that what we saw last month of hey maybe things are actually starting to pick up. No, right? No, it's not. And okay, we'll get another piece of data out of China tomorrow night. That's kind of similar number here, but we will be seeing that tomorrow night. If we come into some of the data that was released last night, we saw the GDP flash number out of the eurozone. And year over year growth, GDP growth is 1.2%. That's wow. I mean, that's you have basically zero interest rate and some interest rates in the negative, and you still only getting 1.2% growth. Just there's just no growth when it comes to Europe, and that just continues to be the case. This morning we had the Chicago PMI number, which is the Fed regional number. Prior was 58.7. Consensus 59, and it came in at 52.6, right? And this looks like the data that we've been seeing. It's slowing. It's not contracting. It's still above 50. It's not contracting, but man, it's slowing. And we continue to just see that in the data. This argument that the bulls have made that the data is going to start to pick up, it's not happening, at least so far. Right? There's still more data to come, but at least so far, it's not happening. That's not what's going on here in the market. Now, consumer confidence, nobody cares, in terms of that number here right now. It's up a little bit, but you can see where consumer confidence is relative to retail sales. But this isn't the crux of the market right now, and what the market's really kind of looking for or really pinning on. It's just kind of out there. Pending home sales, market's not really watching this all that closely as well, but I do think it's an important number. It's one of those numbers that kind of has some foreshadowing elements to it, and this has been a number that has been ugly, has been getting worse, and actually much better than expected here this month. So, one that I think the bulls can point to and say, hey, you know what? There's actually some good stuff out there if you're looking, and I think that some of that's seasonal, right? Pending home sales, we're getting into that time of the year here in the U.S. at least, and so anyway, that's what we see so far. But we have a whole lot of data here, still on tap for the rest of the week, and data that the market's going to have to digest. And in the middle of it's going to be the FOMC meeting announcement. So the Fed, in the middle of it's going to be Apple earnings and all of that. And this kind of, hey, what does the market do with a tech giant that's instead of, accelerating revenue growth, seeing declining revenue growth? It's a revenue monster, right? But going from accelerating growth to declining growth, that's something the market's going to have to deal with, and the market is seeing in other sectors, hasn't really cared, but now it sees it in one of the big tech giants. Now it sees it in one of the big tech giants. So anyway, that is where it that's kind of where some of the things are at. Now, one of the other things going on out there is this discussion over taxes, this political discussion, right? Politics and the market, they're intertwined. You can't get away from it. It's one of those things that, the only reason I really follow politics is because of how it affects the markets. But most of the time, it doesn't have anything to do with the markets. There are times where the market gets an eye to politics, and there are times the market doesn't care. right? And right now is kind of one of those times the market just doesn't care. It's not reacting to political headlines. But we have seen other times where, man, the market, I mean, you want to know how the market's moving or what caused every move? Just pull up U.S. President Trump's Twitter account, and you can see, the bounces and oscillations based on his tweets. But, the market kind of goes through these ebbs and flows of how much it pays attention and how much it cares and how much it doesn't. But question came in here, said, Jeff, I'm wondering if you have any commentary, economically speaking, about some of the rhetoric that I hear in the news headlines regarding taxes, specifically about folks who are upset about the largest corporations paying zero taxes. I guess it sounds outrageous, but is it a necessary evil that my non-economics brain can't process, or is there a world where corporations could pay taxes and still be profitable? And it's a great question, and I know it doesn't have a ton to do with trading, but it's one of those elements that is kind of the crux of the debate between Democrats and Republicans here in the U.S., right? It's one of the big differences between the U.S. and Europe, and it comes down to a couple things, right? There's this word out there that's ingrained in humanity's brain, fairness, right? Fairness. Inherently, we all want things to be fair, right? Well, she got a donut. Where's my donut, right? Want things to be fair. Everybody wants things to be fair. You know what? You're watching a sports game. The officiating has to be fair, right? That's what we want. That's what we strive for. But when we look at the reality that's out there, things aren't fair. It absolutely isn't fair, right? You just turn on a sports game. You watch the officiating. You know what? Half the games it's slanted one way or the other. It's not. Not every call is fair. Fair is what's strived for, but fair very rarely gets achieved. From an economic standpoint, there's this idea of fairness, income equality. Right? Everybody make the same amount. Everybody do the same amount, right? And, if you go back to, some of the socialist rhetorics and, even getting into some of the communism types of stuff and some of these real kind of fair economic theories, you start getting into this concept of fair. Everybody does equal labor. Everybody does equal, gets equal pay. Everybody equal consumption. But when we look around the world, is that the case? Is that the case? It's not, right? Fairness doesn't exist. My neighbor makes more money than I do. What do I do about it? I can say, well, that's not fair. Does that matter? No. It doesn't. Right? In the world we're in, fairness is hard to achieve. And so when you go and you start looking at a topic like, like taxes and corporations, one of the things that we have to realize is most of the arguments are around fairness, and achieving fairness is next to impossible. Right? It's next to impossible. I mean, that's what, Karl Marx, right? Karl Marx was about, how do we drive fairness? But the reality is, different people have different inherent values in terms of what they bring to the table in certain situations. And the monetary worth of an individual and what they do can be different for a couple reasons. One may have a different skill set. One may have different assets that they can leverage. One may have a different intelligence level, right? We all are different human beings, different talents, different ideas, different mentalities. Fair? Is it fair that some of the smartest people to ever walk this planet, were impoverished? Is it fair that some of the richest people on the planet don't do anything? They don't contribute to society in any real meaningful way? Is that fair? No, it's not, right? So fairness doesn't exist. But this idea of taxes and taxes on corporations, right? You hear words, you hear stuff like this, like, oh, well, you know what? Google got away without paying taxes last year. Okay. Did they really? Right? Did they really? Well, how many employees did Google hire? Right? Google has how many employees? How many of those employees pay taxes? How many of those taxes went into the coffers of the IRS? If Google was forced to pay 30% tax, could they hire as many people? Would those people be able to pay taxes? Fewer people paying taxes? Which area do you tax Google 30% or do you tax the workers 30%? There are some of the idea where you take away taxes from the corporations. That way they can hire more employees. That way more people can have more money. That way they can pay more taxes. That helps everybody. Where if you tax a corporation heavily, they're not able to hire as many workers. They're not able to be as productive, right? And that's kind of the argument. Proponents of cutting the taxes on corporations say, well, you know what? The money's going to be distributed fairly amongst the workers. Those that are proponents of taxing a corporation like Google say, no, it's not. That's ridiculous. All the money's going to be concentrated into 5 or 6 individuals. And you know what? They're going to get away with not paying taxes because all these deductions and write-offs and, fancy accounting. So we're not actually getting the same amount of money. And that argument goes back and forth. Which one's fair? Which one's more viable? Which one is, which one will produce more income for the government? Which one will produce better outcomes for business, right? And they're not always the same, right? This isn't all boats rise, tide lifting type of story. This is, hey, you know what? Governments are going to receive less if you do things differently or affect these changes a little bit differently. But in general, Republicans are of the notion of less corporate taxes, more money in the people, less government, right? The government doesn't need as much money. There needs to be less government. Let capitalism work. Democrats look and go, wait, you let capitalism work, there's a lot of unfairness. Things don't get distributed equally. We have a lot of income disparity that creates more poverty, that creates class, differentiation, lack of fairness, right? And that's the crux of the argument, right? You have both sides that kind of beat back and forth, for hundreds of years on that topic. Which one's right? Which one's the best way to go? Well, you have economists that study this all the time. And you know what? If you want one side of the equation, you want to argue one of those sides, you can go find great economic studies that are going to show, look, if you lower corporate taxes, you're going to increase the economy, more people are going to get more money, you're going to lower the unemployment rate. And then you're going to find arguments and you're going to find economic data that says, look, the more you tax, the more you control that, the more the government controls that, the more equal, the more fair things are going to be. Those that are against that are going to say, look, why should the government control it? What do they know, right? Do you put the money in the hands of entrepreneurs who know what to do with it, or do you put it in the hands of politicians? Right? And those arguments are always going to go back and forth. There was a gentleman by the name of Laffer, and he came up with the Laffer curve, and it's an economic theory, and it was one that was used quite a bit. Let's see if I can get to Wikipedia here. Let's get the date here on it. Laffer curve was popularized in the U.S. policymakers, Ford administration, Dick Cheney, Donald Rumsfeld. And basically the Laffer curve is this argument, and let's get the image here, maybe, if they'll give a larger image. All right, we're going to just go back, get a larger image here. All right, here we go. But this is the argument. You put tax revenue down here below. Put the tax rate up above. If you charge a max 100% tax rate, what's the government tax revenue going to be? The tax revenue is going to be zero. If the government charges 100% tax, nobody's going to work. Why? Because they don't keep anything. There's no incentive to work. If government goes out and taxes corporation 100% of their profits, is there any incentive for corporations to exist? No, there's not. So ultimately, the government could go charge 100%, but they're not going to make any money. If the government charges 0%, are they going to make any money? No, they're not. So the idea here is that there's this curve where as you increase the tax rate, you increase the revenue. But that hits a wall. That hits a point in time where, look, people are actually going to start working less if the tax rate is too high. If all of a sudden you were told, hey, government's going to charge 80% of your paycheck as tax, are you still going to work? Are you still going to work in your job? Are you still going to do the same thing? Are you going to look for some alternative? Now, people have to start asking questions like that because, you know what? Their real rate of return, is dramatically less. And so what happens is people stop working. So ultimately the tax rate's higher, but fewer people are working, and so the overall tax revenue shrinks and decreases. Now, this is kind of the basics of it, but this is a simplified version of it. But the bottom line here is that Republicans use this to say, look, if we cut taxes, we can actually increase revenue. If we cut the tax rate, down a little bit, more people are going to work. More corporations are going to go out, try to be profitable. They're going to invest in the future, and ultimately the government's going to get more money. That's a very kind of Republican argument. Democrats argue, hey, it's not fair. We need more fairness. So give more money to the government. The government can then distribute it accordingly to create more fairness, right? And that's, the basics of some of the argument. And obviously, they're very, the arguments are very politicized, right? They're very over the top on both sides, right? Very over the top on both sides. But this is where the argument lies. And so if you go out and you put a tax rate of 0 on corporations, is tax revenue going to be 0 like the Laffer curve suggests? Probably not, right? Because corporations are going to hire more people. Those people are going to have to pay taxes. But then if the people are paying 30% tax and they look at the corporation's not paying taxes, it's not fair, right? It's not fair. So that's the argument. I don't know that there's one side that's better or worse than the other. The whole thing about economics over time is the economic theories change. You can't test economic theory, right? There are too many variables. You want to go out and you want to test how hydrogen reacts with oxygen in an air-free environment or a vacuum environment. You could do that. You could set the experiment up. You could take all the other variables out, and you could just see how hydrogen interacts with oxygen. You can isolate that. In economics, you can't isolate things. You can't isolate the tax revenue. You can't isolate the tax rate because there are so many moving parts. There's so many variables when it comes to an economy that to model them all is next to impossible. So every single economic theory does one thing. It says, assuming income equality, then here's the story. Assuming that all corporations have a 3% tax rate, then this is the theory, right? They make these assumptions and they hold variables steady that really in real life aren't steady. They're constantly fluxing. So yes, you can come up with these theories and these ideas, but overall, everything is fluctuating here, and you can't can't prove one over another, and it's why we have so many really good economic theorists, but why we still don't have one set idea in the world of, hey, this is the best economy for all. China is much more Karl Marx, socialistic, communistic in the way that they go about things than the U.S. The U.S. is a lot more capitalistic, right? Some say moving to socialistic, but, very much capitalistic compared to China. Well, which one's better? You look at China and you see the growth rates. They're way higher than here in the U.S., right? They're way higher. So does that mean that the economic system that China has, this kind of communistic, kind of communistic, but bringing in pieces of what the U.S. is doing, is that the better method? Right? Some will argue yes. Some will argue no. And then what do you get thrown into the equation? Well, you get non-economic factors thrown into the equation, all coming back to fairness. Because what does the U.S. have that capitalism has provided a little bit of that China doesn't have? A different level of human rights. Well, what do human rights have to do with taxes? Well, from a political standpoint, they're put into it. They're, is democracy the best, a capitalistic democracy, the best type of government for economic growth? Probably not. In fact, there are a lot of economic reports and research that suggest no, it's not. That democracy is actually, is actually a piece that can destroy capitalism in the long term. But what does democracy bring? Democracy brings civil rights. Democracy brings, greater human rights, and than what you would get in a communism or fascism type environment. So, they're all kind of weaving in and out of this fairness, and who pays more and who gets more, and do the producers get, do the highest producers get the highest, consumption? You have, in capitalism, this idea that, hey, the more you bring to the table, the more you consume. But is that really the case? Right? Is that really the case? You go look at any corporation. Are the top paid people the ones that are producing the most? In many cases, no. Right? So, it's all kind of mixed together. It's one of those things where, we could make a very nice argument that corporate tax rates being zero would create an economic boom. Make that argument. What does China do when they want one of their industries to compete on a global stage? What do? Not only do they cut the taxes for that industry or for that company, they offer subsidies. They pay them. They say, hey, here, we're going to pay you money so you can grow your business. Is that fair? Now China gets these subsidies. They can produce cheaper. They can flood U.S. markets or flood other markets around the world. Is that fair? No. Right? And ultimately, we see all of those things happening. We see all of those things taking place. And so, yes, the great arguments that corporate tax rate at zero would be a huge boon to the U.S. economy. Would it create more income inequality? Well, that's what the Democrats are going to argue. They're going to say, look, if you cut corporate tax rates to zero, not only are the government not going to get as much money, but we're going to have more income inequality because we're going to have a richer rich and a poorer poor when it comes down to it. And so, anyway, that's the argument there. That's that is one of those things where you could go out and you could charge corporations 100%. And will you have a few corporations? You will, but the only ones that are really going to drive anything are the ones that get some sort of uh, subsidy from the government. And we've seen that. I mean, you go look at what's happening in Venezuela right now. It's a total mess, right? And it's one of those situations where for many years corporations have been treated differently based on how they interacted with the political. And bottom line is, unfortunately, there's not one perfect system. No one's found a perfect system. Many people have theorized or tried to test a perfect system, but there isn't one. So the debates will rage, debates will continue, and it's not going to go away. Right? How's the market going to view all this? Well, the market views lower tax rate as a positive for corporate profits. That's it. And that's what the market is. The market's looking at corporate profits. The market does look at the consumer and consumer spending and all of that. But bottom line, if consumer spending goes to zero, but corporate profits are still sky high, stocks are going to get bought. And so when you raise the corporate tax rate, what happens to corporate profits? Corporate profits go down, stocks go down. And that's the traditional framework there. So, one of the reasons why U.S. President Trump continues to push for lower tax rates on corporations is there's a political element there of, hey, if the stock market's high, there's a perceived wealth in the economy, and looks at that as, hey, my political power is greater. How much political power would U.S. President Trump have right now if the market were down 50%? It'd be a much tougher situation, right? And any and every president goes through it. I mean, President Obama went through it. He took over when the market there in 2000 and 2009 in what, January of 2009, after the market had basically collapsed, he took over, and it was one of those things where what happened to the markets afterwards? They bottomed and just continued to climb and continued to climb. What happened with some of his political power as markets climbed, right? It just naturally rose, right? You go look at China, and China has all incentives to keep their markets propped up and keep them moving on higher, because if you continue to increase the perceived wealth of the economy, your power is not in as much danger. So you can get away with other things as long as the people are happy, as long as there's this perceived wealth factor that is increasing, and we see that happening everywhere. Where don't we see it happening to the same degree? A little bit in Europe. Europe has some of the highest tax rates in the world. Europe has some of the lowest growth rates in the world, and it has some of the most convoluted politics in the entire world as well. And some argue that it's kind of a powder keg, waiting to blow. And those arguments are always out there, but is it going to happen anytime soon? Timing of anything like that is always different, but everywhere's different, and we see different systems go different ways. And the reality is, while all humans want or say they want fairness, human beings do not act in the name of fairness. They never really have. They probably never will, because fairness is subjective. Fairness is a different term for so many different people. Okay. So anyway, that's my 2 cents on it, and the whole argument. Bottom line, the lower the corporate tax rate goes, the higher U.S. stocks are going to go. And if the corporate tax rate starts to go up, we're going to see stocks tend to migrate lower here. Okay. Thanks for hopping on. Before I jumped on, there was a kind of a sell here in the market. Let me jump and take a look. Yeah, we saw this kind of sharp sell in the market right here, and this has been very typical of what the bears have had. They've had these sharp drops. Right, here we go. 10 points. Here we go. Down 10. Big volume. All right, finally a bearish day. Some of the economic data's weak. Some of the earnings are weaker. Oh, okay. And the market continues to track on higher. I mean, when you look at the participation rate number, you look at the game winners versus losers here today. I know I'm rambling here just a little bit, but here on the S&P 500, you have 275 advancers, 229 decliners in a down market. But some of those downs are really big, and some of the ups are pretty darn flat. And so it's one of those where you take utilities out of this market. This mix is very different here, but we're seeing a little bit of strength in materials. We're not seeing any real kind of switch in mode or switch in the desires of the market right now. Thanks for hopping on. Any questions? Please let me know. We'll talk to you later. Take care.